In this session, we're going to introduce you to the concept of critical illness. Some of you might have heard this being called the dreaded disease. This was what it used to be called. And if you remember when we were talking about life insurance, we also said that part of the advance payment on death benefit, for example, would be a dreaded disease type of situation. Well, today, of course, we don't necessarily call it dreaded disease. We call it critical illness. And this is essentially sort of, you might say, looks like disability insurance because it pays you while you're still alive, basically, so you're not dead, so it pays you. But it also is life insurance because it pays you a lump sum. So, for example, if you were insured for $250,000 and you had a critical illness, which we'll look at in a moment, okay, they will pay you $250,000. And, of course, because you're still very much alive, you know, there's no beneficiary in this situation because the check is simply cut to you. And so, like I said, it looks like disability insurance, but it also looks like life insurance, you know, things of that nature there, okay? Now, under critical illness, there are a number of different items today that are ailments that are actually covered and everything. That's beyond the scope of this particular lesson. What is important is what are what we call the big four. And these ones you must know. You must know. And that is heart attack, stroke, cancer, and coronary bypass. So if you look at these four, basically, these are your biggest killers, you might say, in Canada. Right? So, like I said, there's many companies that offer a lot more options, 10, 20, sometimes even go up to 25, that kind of thing. Like I said, this is beyond the scope of this particular lesson. What is critical, however, is that you know these big four. So heart attack, stroke, cancer, and coronary bypass. So in this case here, it could be on the exam, it could be like an except type of question. All the following are covered on critical illness except, diabetes, things of that nature there. In other words, what they want you to know is that these four are the main ones. So any critical illness sold in Canada basically has to cover you for these big four. Now, in order to qualify for critical illness, there are two things that have to happen. First of all, there's what we call a qualification period, and that is 30 days. When we say qualification period, from the date that you actually apply for the insurance policy, for the critical illness policy, right, you have to survive 30 days. In other words, the first 30 days you are not covered. That is what we refer to as the qualification period. And the idea there, of course, is, again, anti-selection against the insurance company. In other words, you already know you've got an ailment, you've got an issue, whatever it is, so you attempt to buy critical illness. So the idea of 30 days is that it gets rid of, the bad risk, you might say, so you survive for that 30 days. But remember, the qualification period is only for brand new applications, so brand new coverage and everything. Once that qualification period ends, okay, then you have a further 30 days called a waiting period, another 30 days. So in essence, in a brand new application, you might say you have 60 days that you have that you have to survive. Okay, whereas a policy that is ongoing after that 30-day qualification that's over, then the only thing you have to worry about is that 30 days. Okay, so going on to that waiting period is that 30 days, and that 30 days you have to survive is from the date of actual diagnosis. Okay, so it is in other words, once the doctor has said, yeah, it is, you did have a heart attack. Yep, you do have cancer. In other words, from the date that you've actually been diagnosed of that particular illness, then you have to survive that 30 days. If you die in between all that, once again, you're not going to get any kind of coverage. So that 30-day waiting period really is from the date of diagnosis. So each one of these here have essentially a 30-day waiting period. And you're all familiar, of course, with waiting period. Now, to overcome some of these issues, okay, in other words, well, what if I did die within that 30 days? Well, is there something that I could buy that will mitigate that particular problem? The answer is yes. Okay, one of the riders, one of the most popular riders that you could buy is return of, is the return of premium rider on that. And embedded in that return of premium rider basically is what we call a death benefit. So if, for example, you should die within that 60 days, or you die of an unrelated critical illness. In other words, even 6 months later, a year later, 10 years later, you die of an unrelated ailment, nothing to do with these whatsoever, they will refund you all the money that you've actually basically paid up in all those years. Okay, so there's a return of premium on death if in the event that you die during that 30 or qualification period or 30-day waiting period, or you died of an unrelated critical illness during the coverage period. Obviously, if it's unrelated, you won't get paid the actual death, the critical illness benefit. In our example, $250,000. But they will refund you at the very least. They will refund you the money that you've actually put forward. Okay. The next one is on surrender. And so once again, usually if you surrender a contract after 10 years, so 10 years or more, they may refund, again, a portion of it, 75%. Some companies may refund the entire amount. So on surrender of the contract, in which you cancel the contract prior to the expiry date and everything else, then obviously you're going to get, like I said, a percentage could be 75%. Usually that's the number, but it could also go as high as 100%. That's not really that important. The point is there something at the end, if I surrender the contract? The answer is yes. But you will have to wait for the minimum of 10 years. And after that, you'll get something in return. Okay. Of course, the most popular one of them all is maturity. Okay. Remember that you can buy critical illness 10-year renewable, and you can buy it for 20 years. You can buy it to a specific age, age 65, age 75, whatever. So just like term insurance, so to speak, you can buy different options and everything else. It's the same idea here, okay? So let's say you bought a critical illness with an expiry date of age 75. By the way, you could also buy a lifetime, which is, of course, very, very expensive, but you could buy a lifetime one as well. But the most popular one is to age 75. So at the end of 75, at age 75, let's say nothing happened to you. You're one of the lucky ones that you had no critical illness of any kind, whatever it is. And so at age 75, what they're going to do is they're going to add up all those premiums that you paid all those years. So let's say you bought it at age 50, and 75, of course, 25 years later, you paid $2,000 a year for the last 25 years. Nothing happened to you, one of those lucky ones, basically. They'll cut you a check for $50,000, basically, so in other words, 2,000 times 25, you get $50,000. So maturity is very popular because if you do have a critical illness, any of these, you get a check. At the end, nothing happened to you, or lucky one, basically, you're still going to get a check. So it's a very, very popular kind of popular rider. And as specified in previous webinars that we've had, the ROP is a return of your own money. So therefore, once again, it is tax-free. There's no opportunity cost, there's no interest or anything. It's just simply whatever it is that you paid in, we simply cut you a check, and that's the end of that. So you do not have to report that as taxable income or anything along that line. Just like there's critical illness for adults, there is also the big four for children. So there is critical illness for children. And same basic provisions in 30-day waiting periods, 30-day qualification periods, same basic provisions, okay? But the coverage, of course, are different. Muscular dystrophy, type 1 diabetes, cerebral palsy, and cystic fibrosis. So these are the big four in regards to children. But again, the same provisions. You can buy also return of premium riders. All those things that we just talked about for the adult package, you might say, are also available for children. So for children, the big four: muscular dystrophy, type 1 diabetes, cerebral palsy, and cystic fibrosis. Okay. And so you notice that in all cases here, what we're really saying is that these are the biggest killers for adults. These are the biggest killers, you might say, for children. Once again, you buy these kind of things, and let's say the child survives just fine, everything is okay. Once again, that ROP could kick in as well. But also, if at the end of the period, even if they have a medical issue, even if they have these medical issues, your age anytime between 18 to 25, you can convert to the adult package. Okay, so if you're concerned that your child may have in the future, or you may have some history in your family of these kind of things here, this is a very, very good option, because at age 18 or 25, basically they can convert their juvenile policy, you might say their children's coverage, into adult coverage without medical evidence. So even if your child does have this particular issues, not an issue, okay, they can convert over to the adult package without medical evidence. Once again, I urge you to obviously look at the company who's underwriting this, because there are all sorts of rules and regulations that apply to these kind of things. But that essentially is what we're talking about when we talk about critical illness. It's a very, very popular type of plan and everything, and certainly an excellent product to consider for your clients. And of course, we'll see you next time.